Hello and welcome to the Primis Propositions Vodcast, Hear the Lion Roar. I'm Matt Brown, Head of Proposition, and as always, smiling in the background is Nikki Hemmings, Proposition Manager. Hello, Nikki.
Hi, Matt. Again, thank you for the introduction and welcome everybody to our next episode of Hear the Lion Roar.
Indeed. So we've got a returning guest. This is becoming a bit of a theme. People must like chatting to us, Nikki, because we've got National Account Manager from Bank of Ireland, Andy Cooke. Welcome back to the podcast, Andy.
Welcome, Andy.
Thank you, Matt. Thank you, Nikki. Indeed, we'd like a returning visitor. We'd like to be back talking to you both.
So, Andy, before we get cracking with your questions, I know you've been on before, but tell us a little bit about you.
Yes, certainly, Matt. I've been in financial services probably for too long. Started off in the world of Abbey National in bank assurance, worked for a few lenders, a few networks, etc. Been at the Bank of Ireland now for 5.5 years, enjoying the national account manager role and working on our distribution, such as the lovely Matt and Nikki.
Perfect.
Excellent. Well, welcome back to this. We'll get you straight into the questions now then. So at the time of recording this podcast, we're approaching the end of half one. So how has the first 5 or 6 months been for Bank of Ireland? Many experts did forecast a drop in lending for about 7 to 10% on 2022. Have you seen this impact on you as a lender at all?
Yeah, to be fair, Nikki, you're right. They did forecast it to be, not a great year for lending, etc., compared to last year. However, I'm really pleased to say that the first 5 or 6 months for Bank of Ireland have been fantastic. We had a good pipeline coming into 2023, and we tried to be more consistent in our pricing for the first 6 months of this year. So, as opposed to what we could have been accused of last year of having 2 purple patches with regards to pricing, which then you get the peaks of volume come in, which impacts your service, etc. We've tried to avoid that this year, and the first 6 or so months to 2023 have been fantastic for us. I mean, just looking at a few stats, for example, the total number of all applications from January to June this year were up overall by about 329% on volume. Looking at all distribution, Primis specifically, we're just over 200% up on growth. So that's great. And I think Matt will have some knowledge of the 3 key areas where we look to lend in, I suppose, bespoke, buy-to-let, and what was a high LTV proposition, I suppose. But bespoke is less rate sensitive, it's more solution based. And that has been pretty consistent in the business that we've brought in this year compared to last year. Buy-to-let is up 205% from the Primis members. And core, which is our mainstream business, is up by an amazing 235%. So for us, an incredible start, especially on the buy-to-let side, I'd probably highlight, because talking to distribution and brokers alike, it's been a tough market for the buy-to-let segment for the first 6 months of this year and tail end of last year. But we're confident in our proposition that we've got on buy-to-let, which is our ICR and our top slicing. Interestingly enough, though, obviously with the stress rates, top slicing year to date makes up 46% of the volume of the cases submitted by Primis members, and 61% of the value is top slicing. So that alludes to the fact that obviously higher loan sizes. So the clear difference in the average loan size between an ICR proposition and our top slicing buy-to-let. So ICR is 132 or just short of 133,000, whereas the top slicing average loan size is just over 250,000. So top slicing is a great alternative and a string to the bow of the brokers out there.
Brilliant. Sounds like you are having an incredible first half of the year. So moving on to the second half of the year, obviously long may it continue. So what are the bank's plans for the second half of 2023?
Sure, look, yeah, it's certainly a great start to the year. We want to continue with that momentum, etc. We plan to continue our journey really to help what we consider underserved areas of the market in becoming a multi-niche lender. Yes, the overall market forecast is for less lending, but we've got ambitious lending targets this year to lend and focus in these strategic areas. We've already launched a launch site earlier this year, our buy-to-let top slicing within the bespoke wrapper. and this will look to help support the intermediary world in areas where we feel we can. So far this year, that's included an increase in lower LTV business, as we've been able to be more competitive in this more mainstream vanilla area. My personal opinion, I'm not too sure if this is due to some of the big six lenders having more of a focus on retention and PTs to maintain their market share, and less of a focus on new business, or due to how we've changed as a bank our pricing and product model, and now how we look now to, I suppose, hedge funds, which allows us more flexibility. Obviously, the swap markets continue, as we record this, to be volatile, with all lenders unfortunately having to withdraw and reprice products on a daily basis. But us, Bank of Ireland, as an intermediary bias lender, all we can try to do is to give your members, our brokers and our clients as much notice as we can, which I know that is probably another hot topic currently in the press. And we also want to be sort of like an easier lender to deal with. And maybe we can touch on that a little bit later on.
Yeah, definitely, Andy. It is a hot topic, so let's come back to it. I guess before we do that, I'm really interested in what you were just talking about around the bespoke buy-to-let top slicing. So I guess, how is that different? What does it look like? Talk to me.
Yeah, sure, Matt. Following the success of bespoke proposition over the last 4.5 years or so, with a focus on clients' main residential property, bespoke now includes, as you were saying there, a buy-to-let option. Bespoke buy-to-let targets the high-quality borrowers within the amateur buy-to-let segment who wish to use an element of personal income within the affordability assessment. It's a combination, I guess, of the current top slicing proposition, where affordability is assessed using a combination of rent as well as the personal income, and the service-led proposition offered under bespoke, which allows a more flexible risk-based approach to the affordability, which has meant obviously a change to our bespoke golden rules. Obviously before, it was just got to be their residential property, maximum loan to value 90%, but now this includes buy-to-let up to a maximum of 75% LTV. Where is it different, as you're asking, Matt? To this, I suppose, a key specific areas under the buy-to-let bespoke. The calculation is the same for a non-taxpayer and higher taxpayer, so there's no differential there, which I know can be confusing for brokers. The top slicing calculation on a 5-year fixed is 100% at the higher of 4.5%, or product pay rate plus 1%, and for less than a 5-year product, 100% at 5.5%, or pay rate plus 2%, again, whichever is higher. Applicants, they must have 3 or less mortgage buy-to-lets, including the new one they're looking to buy if it is a purchase. And one applicant must have a minimum income of 40,000 with a maximum term of 35 years, and similar to, I guess, our normal buy-to-let proposition, we go to a maximum age of 80. We've also, along the lines of the bespoke residential side, have a minimum loan size of 150,000, but there's a maximum loan size of up to 1 million at 75% and 1.5 million at 60% LTV. So again, those higher net worth clients with the bigger properties, on the letting side of things, we can try and accommodate some of those. We allow capital raising for any legal purpose, excluding business, any speculative investments, debt consolidation, gambling, overseas property, and payment of tax. We do allow remortgage of current residential property to a buy-to-let and capital raise to fund the purchase of a new main residence, wherever possible, through bespoke, i.e. let to buy. So we do a fair amount of those as well. I guess the main difference with buy-to-let under bespoke is the income that we can utilise when assessing the case. So the good news is bespoke discretions that we currently apply to clients' income on the residential side with regard to affordability assessment, this can be applied in exactly the same way on buy-to-let bespoke. So just to give you a few examples, we can take non-guaranteed income such as bonuses, commission and overtime up to 100% for those right clients. As well as the approach to self-employed applicants, with this discretion, we can take income which we wouldn't normally consider under the core proposition. So things like taking account into net profit after tax into the affordability, taking latest year's figures in isolation, or consider an income from a business that's not been trading for 2 to 3 years, for example. So there's certainly more flexibility there for the self-employed, as is the contractors. We can look at day one contractors and utilising their income. And the more holistic approach that we take with the bespoke proposition around expenditure that's captured there, exclusion of school fees, for example, or if they've got savings that can cover certain expenditure. We do have for the core ICR and the top sizing online calculators that are dead easy to use for brokers. But what I would say for the bespoke side of things is probably, again, like the residential side of things with a different affordability calculator, I'd encourage the brokers to actually make contact with their BDM to run through the scenario, and then therefore they can assess which income or elements of the income that we can utilise for the calculation. So I'd definitely say, yeah, encourage them to speak to their BDM and point of contact there. So that's the BDM. Underwriters, obviously, they've got the discretion to consider applicants who aren't currently owner occupiers, as long as their profile for the customer and the property makes sense. We're satisfied that the security would be let and not used, obviously, for the applicant's own residential use. So where could that make sense? And we could allow that if the applicant who is currently residing with their partner, but is named on the mortgage, and they're looking to remortgage an existing buy-to-let or purchase another one to rent out, we could do that. Obviously, applicants who currently are residing in tied accommodation, teachers, etc., and applicants who is rented long-term and looking to either remortgage an existing buy-to-let property or maybe buy another one, where it makes sense and there's a story behind it that we can actually have a conversation about, that we're prepared to look at those sort of scenarios where we wouldn't have done before.
Perfect. I tell you what, Nicky, there's a man who knows his business and his products. Very, very detailed and really good info there, Andy. Thank you. So I guess that's all the stuff you can help with and all really, really positive. I don't tend to like to ask this question, but I'm going to because I think it's important. What can't you help with on the flip side of that? And that's not a negative, but I think it's important that brokers understand.
No, 100%, Matt. When we launched Bespoke, say 4.5 years ago, one of the big bits of feedback we had from the intermediary world was, yeah, if you can help, tell us you can help. But if you can't help, equally as important, tell us where you can't help and what you don't do. So we're still very much, as I touched on earlier, in the non-professional landlord, non-limited company buy-to-let, which, you know, some feedback would suggest that's the growth market. But as our figures would suggest, actually, there's still a big for the amateur landlord, and that's where we try to help those sort of clients. So those clients that we can help, they must reside in the UK. So if they're outside of the UK, unfortunately, we can't help them. We can't lend if they're looking to raise funds for any debt consideration or speculative purposes or for business purposes. That's a no-no. If they've got more than the 3 mortgage properties, we can't help them. We're not fans at this moment in time for holiday lets, Airbnbs or HMOs. That's not our bag. Remortgages where the property has been owned for less than 6 months, unless it's inherited. We're not a fan of that. We're not also a big fan of private sales and inter-family sales. We steer clear of that. And the property, if it's not suitable for either letting within 60 days or resale within 60 days into the owner-occupier marketplace. But that shouldn't be anything new, really. That's sort of like taking it from the existing criteria on the buy-to-let side and say, well, look, we're just going to adopt those criteria, those bits of policy for the bespoke side of things as well.
As you both said, you know, it's just as important for our brokers to know what you can't kind of help with as much as it is for what you can as well. So, are there any plans to expand on clients that you can help moving forward under the bespoke wrapper?
Yeah, certainly, Nikki. Certain things are restricted by systems. We've certainly got an appetite to grow and develop the bespoke proposition. We're currently looking specifically with the buy-to-let side of things to add first-time buyers, first-time landlords later in the year. But again, we need to be happy it makes sense as a buy-to-let transaction. We are on that, just waiting for system changes to allow us to release the date that we're going to make those changes. We are continually working with intermediaries with regard to changes that we can make to the bespoke proposition. generally in line. It's got to be in line with our general lending risk appetite and movements in the market. There are a few tweaks that we've made to income, etc., fairly recently. And what I would say is that the BDMs will probably kill me here, but we do stuff that actually the criteria would suggest that we might not. It's the whole scenario of the case and how we position it. And if we can move it forward, we will. So that's why that triage of speaking and keeping close to your BDM is so important with regard to bespoke side of things.
Love it. Great news, Andy. And you think, I guess, we think bespoke is great. We've talked about it, you and I, before. I've seen you present about it, on our Primus events, and you deliver an absolutely outstanding presentation on it. I guess, for me, do our brokers associate Bank of Ireland perhaps a little bit more with bespoke? And are you a bit better known for bespoke? Because I know you've got some everyday vanilla stuff that it's probably worth touching on, the successes you have in that area. So do you want to just talk to us about that a little bit?
Yes, certainly. We've probably been like banging the bespoke drum for the last 3 to 4 years, and the success we've had has been brilliant. But I suppose we've got a few other plates that we spin and a few different bits that we can help certainly the intermediary market with. As I touched on earlier, the increase of the volume of cases, 235%, and what we describe, I suppose, is our core area, more mainstream vanilla, and that's been fantastic. And that is more rate driven. It is more computer says yes, computer says no. But what I would say is that, we do, and we have, as the figures illustrate, I've had some great growth in there. That could be down to our affordability, our criteria, our systems, the service, etc. We do just touch on the affordability there, because that seems to be again, a topic in the industry where brokers are saying it's tough out there to get the right affordability, and certainly that's probably why we've lent heavily towards promoting bespoke with its 5 times income. Whereas on our core proposition, our affordability calculator, I would suggest, is probably one of the simplest, most easy to use affordability calculators in the lender world, so to speak. We've only got 9 questions that a broker needs to complete to give an accurate answer of what we would lend the client. Why is that? We don't want war and peace. We use ONS data, so we're not after a full income and expenditure breakdown. I appreciate for their own compliance records, they'll need other bits, but for our affordability calculator, we want to give an indication of what we will lend without making it too onerous of a process. One of the things I would point out with the affordability calculator, say 9 questions, we use ONS data, therefore we do not need things like ground rent, service charge or pension contributions to be input in the outgoings box, because that can make a huge difference to the affordability. The only thing that needs to go in there is effectively kids and credit, so any childcare costs and any ongoing credit commitments after the mortgage completes, etc. The ground rent still needs to be within our criteria, but as I say, we've made a few tweaks on the website to try and make it clearer of what we do need in that outgoings box. We can go to age 75 using earned income, as long as it's feasible that their occupation says that they're going to work to age 75, so that can be of benefit. It does cap the affordability at 4.49 times income. But what I would say on that, when I've tinkered with it and put joint applicants with children, £600-700 per month monthly commitments moving forward, the maximum it comes out is still 4.49. So some depends on the circumstances, but sometimes by having £600-700 commitments doesn't impact what we'll lend. And obviously, similar to other lenders, it can vary whether it's 2 or a 5 year with the stress rate. So if they're looking for a 2 year, it might fall short. Then looks to the 5 year, because it might work on the 5 year basically. Obviously, if it doesn't fit on the 2 or the 5, then obviously bespoke is the alternative there. But as I touched on, I suppose earlier, we are very much an intermediary-led lender, and therefore trying to improve the broker experience and those touch points with Bank of Ireland is very important to us. I suppose, especially as you get the more vanilla volume, lower LTVs, because you'll get brokers that haven't used you for a little while. So again, working with the brokers and brokers' feedback, there's a few areas that we've looked to improve on. A few, for example, to name are online clarifications. So there of what we need in the affordability calculator, as that's a common pain point and can decline cases which should go through. We've also made several changes to our website, again, through broker feedback. And that includes, now we've got, I think it was launched yesterday, end of June, don't know when this is going out, a bespoke specific criteria page. So specific stuff that's relevant to our bespoke proposition. A frequently asked questions page as well. We've got obviously our lender criteria, but this is more, what if I want to change the plot or the client's property falls through? What do I need to do? And it takes them through the process of what they need to do. So it's clearer, more transparent. And we started to utilize more industry jargon, if you like joint borrower sole proprietor instead of first start, because first start obviously it's like joint borrower sole proprietor. So everything on our website alludes to first start. But if they search joint borrower sole proprietor, then that will now start coming up in alternatives. So we're trying to make life a little bit easier, pre and post application as well, because again, some of our feedback that we had on the system notes that were coming back it wasn't particularly clear where it was in the process of being underwritten. So we changed some of the wording that comes back to brokers as well to give them an idea of where their case is. The other two things that we changed online, updates the BDM finder that goes live any day. So hopefully when this gets aired, that will be out. And we've also done a web chat facility because again, it's from feedback from brokers saying, look, I like to do the type in, key in, rather than be on hold all the time. Some prefer it, some don't like web chat, but we're giving them options. So yeah, we're trying to tick a few boxes in how we interact with intermediaries as well to try and make their life easier, and also therefore makes our life easier as well, to be honest, Matt. Perfect,
Andy. I mean, we're pretty much running out of time, but what I would say is that stuff you just talked about around simplifying language, we know a famous two words in our industry at the moment being consumer duty, and consumer duty is all about making sure we're really clear. So I love that you're doing that for brokers as well and making things really clear. That all fits with where we're going in the industry, really. So perfect, Andy. I think loads of useful information there. We love having you on the vodcast, mate. So if you want to make it a hat trick and come back next year, you're more than welcome. But thank you, Andy.
I'm booking it in now, Matt. I'm booking it in now.
Yes, perfect. Lovely to see you, mate. And I hope everyone takes something really useful from that session. So thanks, Andy, and we'll see you again soon.
Thanks, Andy.
Thanks, Matt. Thanks, Nikki. Thanks for your time, guys.
Bye.